we're looking forward to the negotiation. I think it's going to be positive. We'll, of course, see. As the President of the United States said, if the Iranians are willing to negotiate in good faith, we're certainly willing to extend the open hand. If they're going to try to play us, then they're going to find that the negotiating team is not that receptive.
Deal or no deal? Vice President J.D. Vance heading to Pakistan to lead high-stakes peace negotiations with Iran. But what he calls a fragile ceasefire deal is showing visible cracks. Welcome to the Big Money Show. I'm Dagan McDowell, along with my co-hosts Taylor Riggs, Gary Kaltbaum, Jackie DeAngelis, and with us for this hour, Rosecliff founder and managing partner Mike Murphy. President Trump says he is optimistic a peace deal with Iran will be reached, calling it, quote, the world's most powerful reset. But the Iranian regime is playing games. Tolls at the Strait of Hormuz, slowing traffic flow, attacks on Saudi Arabia's infrastructure, you know, that east-west pipeline, that could certainly complicate talks, to say the least. Meanwhile, do we have a NATO mea culpa?
When it came time to provide the logistical and other support the United States needed in Iran, some allies were a bit slow, to say the least. In fairness, they were also a bit surprised. But what I see when I look across Europe today is allies providing a massive amount of support. Allies are doing everything the United States is asking.
After they were nowhere to be found when the bombs started dropping, the Euros scrambling to catch up, insisting the United States allies are now providing military support. I would say better late than never, but the damage already done. Gary Kaltbaum, looking at these markets today and going into this weekend, at least if you look at the Strait of Hormuz, this looks like a ceasefire con. The ships are not going through in the pre-war numbers. They're trickling through at a bare minimum. That says they're not living up to the ceasefire deal. Why go in the first place to Islamabad?
All I can tell you is there's so many moving parts at this point in time. Every hour on the hour, I'm checking for what happened next, what happened before. Now we have the Lebanon situation going on right now, where the president, or J.D. Vance, is talking to Bibi about that. So where it ends up, I don't know, but you are correct. All the talking about a real ceasefire, I do not think we're there yet. The good news is oil prices have dropped some, but I have to tell you, I think we're about as fragile can be. If something does not get done, I think oil can run right back up to 110 and cause problems for the markets again, and who knows where this ends.
It looks like the market has priced in that this war is over. It doesn't escalate, and it better not escalate. You've seen a pullback in longer-term interest rates, a little bit, a pullback in oil, although it's at $99 a barrel. Stocks are holding up here, although consumer confidence, this is for Taylor, the University of Michigan consumer confidence fell to the lowest on record, 1970s. That's how far back you got to go. I think it's 1978. You want to get in here?
Yeah, so similar things, but you know, we come with our caveat on UMich. I'm like you, I mention it. Unfortunately, the people who run the University of Michigan survey noted that it was across all demographics and across all political spectrums, Republicans, Democrats. And so while it can be a little watch what I do, not what I say, and I don't love the way that people can just, this is how I feel, but I'm still going to buy. I didn't like that sort of there was a deterioration that was very broad-based in the way that everyone was feeling, even if it is just feelings and maybe not. But yes, going back to the 70s, you had record low down to 47.6. I think concerning for me, year-ahead inflation forecast jumped back up to 4.8%. The employment component deteriorated a little bit, and 54% of consumers spontaneously mentioned that high prices were eroding their finances. That's up from 47% last month and 38% a year ago. So the good news, though, from all of this is, I don't know, maybe this isn't good news. CPI was not good, even though it was expected. And I guess what I was trying to say is the good news is that there is lags in terms of high prices that get passed on to the consumer. WD-40 was one yesterday that said the prices, we won't see this for 90 to 100 days. So the good news is what we're seeing today, $100 oil, doesn't mean tomorrow it's going to hit you. It could be 3-6 months from now. That's bad news because that is higher prices. But my good news here is if you can spread that out, and we've talked about how everyone in the supply chain eats that cost, it's very different for me than, let's say, the airlines who see spike in jet fuel and they raise your baggage fee $10 or cut capacity to immediately solve that. Products like WD-40 and everything else, they're trying to spread it out in the supply chain over the next 6 months, maybe to ease the burden somewhat. Plus, you factor in a lot of promotional activity. If you want to get that product out to the consumer, you're going to have to cut prices and do promotions. So I guess that's sort of the good news, bad news where I sit today. None of that is to say we should not be in Iran. If we're trying to change the world, there's a cost, and maybe that cost is higher prices. I'm not going to say that that's not worth it, but I'm just saying what the consumer is feeling and what the market is experiencing.
So going into today, Dow and S&P up 3.5% this week. The NASDAQ was up 4.3%. Transports, 7% gain. Yeah. All of that says this is over.
Ooh, I think the market thinks it's over, and I think that you're right. And I use my own 401k as just a way to sort of track what's happening. I'm almost back at the peak levels where I was before this war started. Now, Jack Keane has an article, it's an editorial piece in the New York Post today that I really like. He talks about how this wasn't necessarily the best move for the United States to have the ceasefire right now, but ultimately he thinks Trump will do what's necessary to see this through, as he has promised the American people. There is a little paragraph in here, though, where General Keane talks about what the White House was hoping to achieve, Dagan, through the ceasefire. And he says the White House hopes to ease gas prices further and boost the stock market, while Iran is trampling on international law to do so. Under the customary law of the sea, the Strait of Hormuz is an international passage that must remain free to all. Now, speaking of that strait, we talked about this toll idea. Are they charging vessels tolls to be able to move through? The president had a truth last night where he said there are reports that Iran is charging fees to tankers going through the Hormuz Strait. They better not be. And if they are, they better stop now, President Donald J. Trump. There's a lot that's unclear to us, I think, to the players that are involved, because a lot of information isn't necessarily flowing out of that region. And then, of course, you've got these talks that are going to start to take place. Keane goes on to describe what the regime wants out of this. They want to drag it on as long as humanly possible. That is to their benefit. They want to hold on control to of the strait, to have some dominance, to show the neighbors in the region, look, you know, yes, things have been heavily devastated here, but somehow we are still in charge. Trump also just told the New York Post, let me read this and then I'll finish, but he just told the Post that, I'll summarize, the military is at the ready to go if these talks don't go as planned. So I think back to Liberation Day and tariffs, and Dagan, as you and Taylor pointed out, when that 10-year yield started getting to a place that was really uncomfortable for the market, and all of a sudden that sheet of initial reciprocal tariffs was thrown out the window and a new strategy was adopted. I think that's the kind of thing that's happening here. And if the market thinks, well, this is over, then I think the market is wrong.
That was one thing, and Mike, you can take this wherever you want, and I saved the best for last here.
Thank you.
You're welcome. I'm just all kinds of flattery on a Friday. I asked David Bellavia, the Medal of Honor recipient, yesterday about that, given the troop levels that we have in the region, 50,000 U.S. troops across all branches, 2 aircraft carrier strike groups, the Abraham Lincoln, and then the Bush is switching out with the Ford, 20 warships, more than a dozen air squadrons. And he made a really interesting point, being a warfighter himself. He said, I think the only reason why we're here is because of what happened 48 hours before the ceasefire, that it was the B-52s opening up on Carr Island and got really close to the oil. But we can do whatever we want. And it was this piece of what he said. that war machine, you've given them 3 days where they're rested. They've got brand new socks, they've got warm chow, and they're ready to go. And so what's so surprising, the first day of the strikes, it was air fire. But unlike the first 31 days, when this thing started over a month ago, you don't have any of the defenses, Iran, that they had to begin with. With the second punch, Iran can't survive that because we have all at once. It's not just air power. It is land, sea, and air against a nearly defeated enemy.
Yeah, a lot there. So I think the reason the market has rallied so strongly is because we saw the negatives of what could come from the war. And as you point out, they're now, this is a defeated enemy. So the market rallied, I think, because looking forward, there's not more of a downside. What President Trump decides to do, if they will not negotiate, I think he's going to go in and take decisive action, whether that's bombing infrastructure or taking Cargill Island, whatever that looks like. It's still not a major risk to the U.S. or to the U.S. markets. So I think that's why you've seen the market come back here to almost all-time highs, just 3% off all-time highs. So I think to remember, President Trump did this because you have this terrorist regime. So he went in there, he's taking them out, he's doing something no one else wanted to do. And I think maybe Taylor talked about University of Michigan. People are hearing this firsthand from the president. You know, he's not letting CNN dictate the messaging on this. So, you know, that definitely makes people feel uncomfortable. I'm going to bomb the hell out of them. Or, you know, maybe it could be said differently, but people are hearing in real time what might happen from President Trump. So I think that might be what causes some uneasiness with consumer confidence. But we're in a better place today than we were 30 days ago. This is near an end. We can see the end. And as President Trump said, he could take all the oil. He's not there to do that. He could. If Iran isn't going to negotiate, if they do, market's going higher. If they don't, we probably have a sell-off short term. And you have oil spike short term. And then we go higher. Mm-hmm. So either way, I think it's a win-win.
Consumer confidence is a moving target and can move very quickly both up and down. But when you see war going on, when you see gas prices doing what they're doing, when you see Delta and all these airlines raising baggage fees, I think it's FedEx and UPS, a cost to deliver, people recognize that. And in March, I think the market was down, and I can tell you a big component of that number is the market. So if things get better, that consumer number will come back as quick as you can say boo. But again, there's so many moving targets, and we have to remember one thing about Iran. They hate us. They would love us to be off the planet. They would love Israel to be into the sea, and they've determined that forever, and I don't think they're ever going to stop regardless of what anybody does. They're going to still have proxies with Hezbollah, and I can tell you stories about that when I was in Israel and getting hit by 5 missiles over my head, and the military says, oh, we're not going to do anything because it wasn't that bad. Imagine if somebody in Newark is lobbing missiles into Manhattan. That's what Israel has to deal with. So no matter what, I don't think this is going to be over, but I think it does get better because a lot of the Middle East, they're tired of it. They are done with it. That's why you had the Abraham Accords. Even the guy from Syria, where did he come from? Al-Qaeda, wants to be moderate and try to build Syria into a great country instead of what it's been. So fingers crossed and that this job gets done sooner rather than later.
But you're hitting on indirectly a lot of the issues that Americans have with this conflict. That what happened to America first. It's a lot about what the Middle East has had to deal with, but what about us? Because the us here are dealing with dramatically higher fuel prices right here, and it's showing up in these confidence numbers. You're looking at private credit.
Okay. Billing this is a good thing, but I don't know. I'm going to say what's happening, and you guys tell me if this is good or bad. So Ares is one of the latest that actually is planning a significantly smaller flagship credit fund. The previous record breaking was $34 billion. They're looking to raise for a new fund closer to $20 billion. Now, a lot of people are thinking, okay, maybe you can't because given all the redemptions. Ares, for its part, is saying actually smaller fund allows us to be more nimble and go in, use less leverage, and be able to deploy capital in times of serious dislocations in the market, such as these. So we're going to launch a smaller fund to be more nimble and take advantage. Either way you look at it, private credit has been a space in the last couple weeks that has been under pressure, blocking the gates, the redemptions. I don't know. You guys weigh in on this one.
Yeah, I think the fact that they can get any sort of fund raised right now, if they can close that, I think that talks a lot about the power of their money-raising machine. But there will be opportunities, so things will change in the private credit space. There'll be maybe more transparency for a while, or there'll be less leverage for a while, but people still want to invest. Okay, there's a sell-off, things are down, and people will put money to work there, and there will be, maybe it's not today, but there will be money made in the private credit space.
When I invest
in that stock, if you bought it at the beginning of the year, you've lost 38% of your money.
When I invest in the stock market, there's a bid and the ask 100% of the time when the market's open. With the private credit and how they price things, you just really don't know. When people get scared, give me my money back. And just so you know, and I'm a big believer in watching the stock market, in that if you look at Ares and you look at Blackstone and KKR and Apollo, these stocks have been absolutely trashed over the last few months. I'm watching them very closely. I think that'll tell a lot. I'm not saying it's 08, but you know what determined everything? The price of Bear Stearns and the price of Lehman, how they just kept cratering and crating till all heck broke loose. And again, I'm not predicting that, but when you deal with pricing, that is, you just don't know what it is. You don't know. You're all about how much money you have invested and who's investing and whether they want it back or not. Simple as that.
And those Bear Stearns hedge funds that were one of the earlier signs blew up about a year and a half before Lehman went bankrupt. So this is a slow rolling car crash. And if you watch this program, we warned you about these stocks last September. We would have saved you a lot of money. Coming up, California scheming. Gavin Newsom says the state is leading the charge on fraud. Reality, it was caught flat-footed. Stay with Big Money.